Hello, my students, and hello, everyone. This is Teacher Angel, and welcome back to our Intermediate Accounting online classes. For today, our lesson is all about revaluation. Now, let's proceed to the subsequent accounting for the revaluation surplus. So, after the initial measurement, are we going to do with the revaluation surplus? How are we going to present the revaluation surplus? So, revaluation is initially recognized in the other comprehensive income unless the revaluation represents impairment loss or reversal of impairment loss, in which case it will be recognized in the profit or loss. However, the revaluation surplus may be transferred directly to retained earnings when the surplus is realized. The whole surplus may be realized on the retirement or the disposal of the asset. Subsequently, the revaluation surplus is accounted for as follows. If the revalued asset is non-depreciable, for example, land, then the revaluation surplus is accumulated in equity is transferred directly to the retained earnings when the asset is derecognized. So, mabalhin siya sa retained earnings pag tangtango na ang non-depreciable asset. For assets that are depreciable, meaning they're subject to depreciation like machinery, equipment, building, a portion of the revaluation surplus is allocated or realized over the useful life of the asset and may be transferred periodically to the retained earnings as the asset is being used. And we call this one as the piecemeal realization. So let's proceed to the example. The following data pertain to a machinery on revaluation date. So these are your data. The original life of the asset is 20 years and the remaining life is 15 years. So therefore, the used life is 5 years. How do we record the depreciation subsequent to revaluation, after nasa revaluation? So mag-base na siya sa sound value. Dili na siya mag-base sa 12 million, dili po siya mag-base sa 8 million, but on the sound value or the depreciated replacement cost. So how do we compute? So that's 9 million divided by 15 years. So for the remaining life of the asset, every year you are going to recognize depreciation of 600,000. Now, we need to prepare another entry for the piecemeal realization since this is a machinery which is a depreciable asset. How do we recognize the piecemeal realization? Just get your revaluation surplus and divide it by the number of years in terms of the remaining life of the asset. So, mura na siya og depreciation. Okay, straight lines siya. Revaluation surplus, debit, 200,000 and credit retained earnings. What will be the carrying amount now after we posted these entries? So for your machinery, so we don't have any entry for the machinery, so there's no adjustment. But we have the accumulated depreciation credit, so therefore increase ang accumulated depreciation. It becomes 3,600,000. Then our sound value here will become 8,400,000 because our accumulated depreciation has increased. So 12 million minus 3,600,000, that would be 8,400,000. And what happens to our revaluation surplus? So diba we have existing 3 million revaluation surplus. Okay. And then we have here a realization of 200,000. So that's a deduction. So this would be 2,800,000 balance. Again, if the problem has a tax rate, then therefore our revaluation surplus is not 3 million, but that would be 2,100,000, which is 3 million times 70%. So that's the net. So divided by 15 years, that's 140,000. What if there would be change in life and residual value of the asset? So we have the following data. So the original useful life is 10 years and the revaluation shows a revised useful life of 12 years from the date of acquisition. So na dugangan siya og 2 years. Based on the original cost and original useful life, so how much is our depreciation? So that's 8,500,000 minus 500,000 divided by 10 years, that's 800,000 a year. So therefore, how many years na ang machinery? So 3,200,000 divided by 800,000 annual depreciation, that would be 4 years. So 4 years na siya, so 4 over 10, that's 40% depreciated. Okay? Then, therefore, if it is 40% depreciated based on cost, we should also depreciate the replacement cost by also 40%. Another way to get the percentage is you have here the 4 years expired over 10. Ayun, katong ganiha. Also, you can compute your age of machinery by multiplying 40% by 10 years. So, pwede lang po siya. Next, we have here, how do we compute our revaluation surplus? So, first is you have to place the amounts for the cost. So, we have 8,500,000. So this is not 8 million, but 8,500,000. And then we have residual value of 400,000. Why is it 400,000 when the original residual value here is 500,000? So the new residual value of 400,000 is considered in determining the depreciable amount based on cost. But original residual value of 500,000 must be considered in computing the accumulated depreciation based on cost. So for the purposes lang of determining the revaluation surplus, we're going to apply in the computation the new residual value. So copy on both column of the cost and column of the replacement cost the new residual value. So this is what will happen. So get the depreciable amount based on the new residual value and then get the accumulated depreciation. So the accumulated depreciation here is 3,200,000. So this is again based on the original nga depreciable amount. So based on the original yun yung depreciable amount based on cost. So 8,500,000 minus 500 divided by 10 years. So ano siya? So that's 3,200,000. So kapihon lang gihapon siya. Okay? Kapihon lang gihapon siya dire. So do not compute based on 400,000. So kapihon lang tong existing accumulated depreciations. 8,100,000 minus 3,200,000, that's 4,900,000. Then we have the replacement cost, of course, 12,400,000 minus 400,000, that's 12 million. Then that would be 40% depreciated. So 12 million times 40%, that's 4,800,000. Get the difference, that's 7,200,000. Get the difference between the column column for cost and column of the replacement cost. So these are the appreciation. Now let's prepare the entry. So to record the revaluation, okay, how much is the increase in the machinery? This is your increase, 3,900,000. So debit machinery, 3,900,000. For your accumulated depreciation, the difference, so you have 1,600,000 and the revaluation surplus of 2,300,000. To compute the depreciation, again, that will be based on the sound value. So what is our sound value here? So this is 7,200,000. So 7,200,000 divided by 8 years remaining. Why is it 8 years? Diba 10 man to siya originally, and then 4 years nang nilabay. But the 10 years is changed to 12. And then 4 years na ang nilabay. So therefore, we have the 8 years remaining. So 7,200,000 divided by 8 years. So debit depreciation, 900,000. Credit accumulated depreciation, 900,000. And finally, record the piecemeal realization. That's based on your revaluation surplus, 2,300,000 divided by, again, 8 years. What if in the succeeding years, the fair value of the asset, instead of increase, it decreased? Okay, so ni baba. So for example, on January 1, 2020, the SFP shows the following data: equipment at cost, then accumulated depreciation. On the same date, the asset is revalued at the depreciated replacement cost or sound value of 4,800,000. This is your depreciated replacement cost. Remember what is a depreciated replacement cost? That's replacement cost minus the accumulated depreciation that is based on the replacement cost. So this is your DRC. So therefore, kaning 4,800,000, this is your DRC. So we have to find out how much is our replacement cost and how much is the accumulated depreciation based on replacement cost. How to do that? We need to get the percentage of the asset is depreciated. Pila man ang percentage? You can use this one. If it's 4 years na ang expired, then 4/10. So that is 40%. Or you can also use this one, 2 million divided by 5 million, where 2 million is the accumulated depreciation and 5 million is the cost. So therefore, if it is 40% depreciated, so dapat pod ang ato ang accumulated depreciation based on replacement cost is also 40%. So if the accumulated depreciation is 40%, so therefore this is 60% and this is 100%. 4,800,000 represents 60% of the replacement cost. So how do we get the replacement cost? So that's 4,800,000 divided by 60%. So that is 8 million. Now that we know the replacement cost, so we can plot it here, 8 million, and then of course 40% of 8 million, which is the accumulated depreciation. So this is 40%. So that's 3,200,000, and this is our sound value. So get the difference, that is your appreciation, then plot debit equipment, credit accumulated depreciation, then credit revaluation surplus. In effect, the carrying amount of our asset now is 4,800,000. For the depreciation, we will base it on the sound value or the depreciated replacement cost. So 4,800,000 divided by 6 years remaining life, kay 10 man to siya originally, minus 4 years expired life. So you have 6 years. Then piecemeal realization, that's 1,800,000 divided by 6 years. If there are no changes whatsoever, then the depreciation and piecemeal realization will be the same every year. Continuing the illustration, on December 31, 2022, what would be the balances of your equipment, accumulated depreciation, and revaluation surplus? So, diba, we have the updated amount, the revalued amount for our machinery, that's 8 million. And then, how about your accumulated depreciation? So, ang na-compute nato ang proportionate accumulated depreciation is 3,200,000. And we have 3 years na nga nag-depreciate, 800 times 3 years. So that is 2,400,000. So now the total accumulated depreciation is 5,600,000. So the depreciated replacement cost as of December 31, 2022 is 2,400,000. For the revaluation surplus, originally we have 1,800,000 and nagsigit ta og debit in the past 3 years of 300,000. So 1,800,000 minus 300,000 times 3, that's 900,000. So the revaluation surplus now would be 900,000. What if on January 1, the following year, the fair value became 1,050,000? Remember that the carrying amount nato, the depreciated replacement cost, which is the carrying amount in 2022 is 2,400,000. And now, the sound value niya or the fair value niya in January 1, 2023 is 1,050,000. So, ni ubos. So, it was decreased. And the decrease is, how much is the difference niya? Okay, so that's 2,400,000 minus 1,050,000. So, that is 1,350,000. Therefore, we will have a reversal of the revaluation surplus. Kaya remember, ang revaluation surplus, nisaka iyahang value. Nisaka ang amount. That's why surplus siya. So, kung niubos na siya, then we need a reversal. But how much are we going to reverse? So, you need to compute now how much would be the corresponding replacement cost based on the 1,050,000 fair value or 1,050,000 depreciated replacement cost. So, mag-gross up na sad ta. The 1,050,000 should be this one, kaning sound value. And then gross up, okay, how much should be the replacement cost and how much should be the accumulated depreciation. So, remember, the original life here is 10 years, then 4 years expired, plus 3 years, 2020, 21, 22. So, 7 years na ang nilabay. So, 7 years na ang expired life. So, therefore, 7 over 10, that's 70% depreciated. So, kung 70% ni siya, therefore, kaning 1,050,000 ang 30%. And 1,050,000 represents 30% of the replacement cost. So, 1,050,000 divided by 30%, you will get 3,500,000. So, just get the difference at 3,500,000 and 1,050,000. That would be 2,450,000 nga accumulated depreciation. As a result of this, observe that instead of increase in this column, instead of appreciation na ay reduction. So, 8 million to 3,500,000, that's a decrease by 4,500,000. Then, from 5,600,000, nahimong 2,450,000. And from 2,400,000, it became 1,050,000. What would be our adjustment? Just plot here the difference. Okay, niubos mo na replacement cost, so credit the equipment. Because diba this represents the equipment na account. And then decrease in accumulated depreciation. So debit 3,150,000. And then the difference, this one, kaning 1,350,000, we have to check first if there is an existing revaluation surplus. Of course, there's an existing revaluation surplus because previously we recognized revaluation surplus. And how much? Based on our computation earlier in 2022, your revaluation surplus is 900,000. So, therefore, our reversal will be first applied against the existing revaluation surplus, which is 900,000. So, i-exhaust una ang remaining revaluation surplus. So, debit revaluation surplus 900,000. And the balancing figure, this one is the squeeze amount. Okay, katong balancing figure is 450,000, and that this will be accounted for as a revaluation loss. In some other references, they also use the account impairment loss. So they also use impairment loss. So that would be debit to revaluation loss 450,000. Now that there is a change in the sound value, how much would be our depreciation in the remaining 3 years na life? So that would be based on 1,050,000, which is the new depreciated replacement cost. So 1,050,000 divided by 3 years, that's 350,000. Are we going to recognize piecemeal realization here? The answer is no, because there's no more balance in the revaluation surplus. Wala na tayo periodically realize. Kaya wala naman tayo revaluation surplus. Why is it wala na revaluation surplus, ma'am? Because we already closed the remaining revaluation surplus ng 900,000. We close it because of the reversal of revaluation surplus.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.